here in the chat where you can apply for it. It takes like 2 seconds to apply for a trial of the Edge Finder. We now have two products officially. This one is not yet available on the market, but we do have an early access waitlist. This is the Stock Box, which is really exciting stuff. Stock Box launches November 1st. If you would like early information, if you're a stock trader, if you're an ETF trader, an options trader, this is the tool. We've been working on this thing night and day for the last year. It looks great. It feels great. It's got a long ways to go, just like the Edge Finder did when we first launched it. It's got cool color schemes. I mean, come on, you got like blue and red for Forex and futures, and then you got like green and red for stocks. Julie on our team did a really good job helping with all the colors on both of these things. And genuinely, colors are so important, like to the feel of a platform. I mean, you guys know if you're playing around on charts, you know how important it is to get your charts feeling and looking right. So we spent a lot of time playing with colors to make it look and feel right. Anyways, Stockbox, if you want early access to it, early information on how to get the Stockbox when it drops can be found by clicking the link that just got dropped in the live stream chat, wherever you're watching. If you're watching on Twitter, maybe James, you could drop a message. I haven't thought about this, but Stockbox for Twitter, we've got some people watching on Twitter right now. Maybe we'll drop a message at the bottom of the stream. You might just need to refresh the stream to see that comment when it comes on there. Anyways, guys, we're going to take just a quick break, and then Chris Pulver is going to take over the show. I got to get off here. I'm coming down with a little bit of I've had a little bit of a cold, so my throat is hurting from all the talking. I got to go do a podcast. So wish me luck, and you guys are in good hands. You got Chris Pulver coming on next. He's going to talk some stocks, options, FX, futures, everything. And then maybe he'll even tell us about his weekend plans. So stay tuned, and we'll be right back. Stay tuned.
What's happening, everybody? Happy Friday. Welcome back. Nice to be with all of you today. Market gapped up a little bit, pushing slightly higher. Took a small loss on SPX this morning, back in to recenter it and trying to get a couple of bucks out of it today if it will just chill here for the next maybe 20 to 30 minutes. If it does, then I've got profit already looking good. I'm up about 40 cents on the dollar, trying to get 50 cents on the dollar. And I might actually bump that down a little bit lower, but I'll just see and assess what price is doing. So far, weekly summary has been pretty good. I put in trades. I updated my Pulver Alert section for A1's Discord. So my Pulver Alert section on FX, I added in trades on dollar CAD, added in the trades on euro pounds. Yesterday, I took a trade Qualcomm CQ or QCOM. Took in a trade there, so I added that one. So that's new. Okay, this was new from yesterday. This one also new from yesterday. And then trades we had this week, IBM closed for profit. What was the other one? UPS closed for profit. And then Tesla you can close for profit if you want to. It was up around 60, about 65% max profit. If you want to close it now, we'll take a look at that one this morning. Other trades I've got going on here. So I'm going to get my AT&T stock called away. Owned shares, 2150 covered call, which gives me actually it allows me to get it called away roughly up to like 2195 based on the covered call that I collected. It was like a 30-40 cent premium. So it's like getting it called away at 2195. The current price is just over $22, so I'm sacrificing about 20-30 cents a share. But I'm going to get it called away today. It's going to be about $1,700 profit. So I'm happy to get that profit. Obviously, I'm happy to get the buying power back, and that's good. So I'm going to let AT&T do its thing, take some profit there. Elsewhere, the portfolio is doing just fine today. Let me take a look at bit everything top down. Still watching my SPX for some profit here. What else do we have? Other positions, I'll check everything P&L on the day. So $40 on JD. Ooh, that's a nice little, it looks like we have some China love here. Yep. Baidu's got a nice little swing. Q's nice little swing. Two more winners from some credit spreads. Snapchat up at 1047. I own the shares at 11. Alibaba's up on the day. Google's up on the day. Let's see, uranium. That one, is that at fresh highs? No, I think that's pulling back a little bit. Walgreens at 954. All right, Walgreens still has some shares. My break even's around like $13, $14 on these two accounts that I have. Walgreens. I do have a covered call. I do have a put. It's out towards the end of the year. Let me see what this is worth. Right now, this shows. Okay, I still have some more decay in this one. It's sitting around 67% of the profit on the call side. I also did a roll this week on OXY. So I rolled my shares down to 53 and out to the 8th of November, which I believe is right before earnings. And I'm trying to get this called away at 53 bucks and give me about $500 per account. Pfizer at 28.66. I've got it covered at 29 out to next Friday. I'm still trying to finesse Pfizer out for a couple of bucks. That stock overall, I'm still up about $17,700. If I get it called away, I'm hoping that adds up to about 20 grand. So I'm just going to watch that one closely. Let me go back to the overall P&L for alphabetical order. Let's see here. Anything else? Chewy is at 27. Costco just can't do no wrong. This thing's up 1,300 bucks, but that's just all ratio spreads and other things. MicroStrategy 242. Are we up to like fresh highs on MicroStrategy? This stock is relentless. Holy fudge, man. Wow. MicroStrategy is not messing around. What is Bitcoin doing? 68. Still not at fresh highs. I mean, how is MicroStrategy getting all this love? What's Coinbase doing? Anything? Coinbase still has some room to run. I got a bull call spread on there. We took this week. I think I put in Coinbase this week on Monday. What else is going on in that world? BITO up to 1954. It'd be lovely to see some direction there. IBIT, looking much similar, very similar to Bitcoin. Just want to see if we can breach these highs. FBTC, same type of situation, same thing. We just need to see if Bitcoin can breach the highs. So if it does, hooray. Listened to two podcasts last night, which were pretty interesting. One was very pro Bitcoin, one was very non-pro Bitcoin. So I guess anti-Bitcoin. So look, everyone has an opinion, but we'll see what it does. I think it's safe to say that whatever happens in the stock market is going to be, we're going to be benefiting from probably being long the stock market and taming inflation by just trying to outgrow it, because inflation is probably coming back in a big way. The one thing that I want us to be conscious of would probably be this right here. Okay, this 10-year yield. Look, back in 2022 and 23, when this market, when we had our bear market in most of 2022, I mean, the yields were rising. So this is interesting. Like right here, this was 2022. We had that nice kind of 5-wave bear market in 2022 before we had a Q3 rip or Q4 rip, and yields were rising. If this gets back above 5%, that's probably not going to do good things for the markets. I mean, if we see a bunch of turmoil in the bond market, it's going to drag into equities, whether we like it or not. And if we get above 5% in the 10-year and we go to 6%, I would think we're going to have some type of straight up crash, because it's going to put a lot of strain on the entire system. So anyway, I am staying out of bonds right now. I am in gold. I like gold. I like silver. Bitcoin is the alternative. I'm still long assets for the most part. Diversifying a little bit. Mag 7 has earnings next week. I'm curious, just about like anybody else, what is Mag 7 going to give us? It's a lot of market cap, right? If we think about Apple next week, I mean, think about your Mag 7. We're talking about a stock with $3.53 trillion in market cap. Is it a great stock to have? Sure. But do I want to buy it at all-time highs? Not necessarily. So I would actually be curious to see pre-election if somehow the market's like, you know what, Mag 7, you guys don't make money fast enough. You guys aren't growing fast enough. Your growth rate is slowing. It's, NVIDIA was leaps and bounds, growth, and then it's been doing this, right? It's still growing. It's still clipping. It's still making earnings, top and bottom are getting beat, but it's not at the same pace. And so I wonder if the Mag 7 is going to be treated the same way. Is that going to force the market to rotate out of Mag 7 into other things? Yes, no, maybe. There could be a severe wealth effect. If the Mag 7 goes down for whatever reason, it will definitely drag the markets lower. That's a lot of market cap out there to potentially fall if it does. And just imagine how many portfolios are sitting long Mag 7. Probably everyone, right? Every 401k that's in large cap, every 401k in the S&P and the Nasdaq, you're in Mag 7, whether you like it or not. So, as much as we love the high concentration and how easy these stocks have been traded for the last decade, they have it's a double-edged sword. Like, they can be great for everybody, and they can also drag the market lower if they decide that they're having some difficult times. And it's not like the stocks aren't making money. It's that investors are like, is it really this valuable? Is it really this type of multiple? So we'll see. But seriously, the volatility we could face the next couple of weeks is going to be pretty wild. I mean, think about this. We could have Mag 7 plus, whatever earnings next week, plus hundreds of other earnings. We'll say like 500 earnings next week. Okay. Then we have the US election. Then we have the Fed. Then we have non-farm payroll all the week after. And the election, the one thing we have to wonder, is everyone watching like the poly market stuff? You got like, what are the two big ones that are floating around? Poly market is, I think that one's the one that was in France. There's like a $28 million bet going around that Trump's going to win. There's like Kolshi or Kashi, and there's poly market. There's a couple other ones. It doesn't matter. Point is, all these betting markets are trying to show they're more accurate than polls. Maybe they are, maybe they aren't. But will the election be decided election night? That's what I'm wondering. Right? I mean, I hope it's not dramatic. It's like, oh, we can't count. It's going to take days to count. We don't have the votes in. We don't have the tallies in. I mean, if the longer the market is waiting for the decision for the popular vote in the electoral college, there could be some volatility around that. That's at the same time as the Fed, at the same time as non-farm payroll. So that could be a week that it could be very volatile, right? Very shaky. Price could be up and down. Whoever is the president, whatever the decision is, it's probably same old for the market. Maybe Trump gets a bigger bump because of tax cuts, tax breaks, but we're going to spend to oblivion again. So it's like both are going to spend a ton from the government side. Anyway, I guess the sad part is we've been talking about it. Might as well just get it over with at this point. That's my thoughts. I mean, it's happening whether you like it or not. That's fighting against father time. Okay, gold in the coming months. Yeah. So I mean, the last several weeks, I've been on the same. I've been pretty much a broken record. There's a lot of stuff I like, but what I like is having buying power. Okay, just in case. And I'm looking to see if things pull back to a 21, a 50, a 100, a 200 moving average. That's it. So everything I look at today, just think about this. Apple sitting here at this 21 moving average. Well, if there's anything that allows Apple to pull back deeper, then yeah, I like Apple lower. Okay, Nvidia, same thing. I like it lower. Nvidia, we're sitting here trying to revisit all-time highs, which I'm sure that it could get there. But would I love to see Nvidia? I mean, it doesn't have earnings next week, but the Mag 7 is probably powerful enough to drag the markets down, and maybe it drags Nvidia just because of overall sentiment. But I'd love to see Nvidia find at least something to balance 21 or 50, something. If I don't get it, I'm not chasing it. I've got ratio spreads down here that are income driven. That's fine, but I'm not chasing these things at highs. Amazon sitting here like pretty well supported. I'd like to see Amazon if it goes higher. I mean, I own shares. If it goes lower, I've got tons of income plays down here. And if it falls back in line with my averages, I'll just reestablish some fresh positions and go long. So I want prices to come to me. I've got lots of buying power that I'm ready to deploy. It's just a matter of giving me a good opportunity to do it, right? Microsoft, same thing. Google, same thing. Google, I've got to trade into the rest of the year. Microsoft, same thing. I mean, I could probably get a Microsoft trade in to go for the end of the year. Microsoft has earnings next week after market. I mean, I could place a trade on Microsoft if it's worth it. Let me look at it right now. Let me see what a price out is. If I just go end of the year, can we get to highs again on Microsoft? Possibly. Right? Let's find out. So let's go Microsoft. If I go out to, we've got a dividend play on the 21st. If I go out towards the end of the year, December, January, let's go out to December. If I buy a 430, sell the 435, let me move one strike up. That's not great. It was way cheaper to trade Google than it was Microsoft. So this would cost me, I take that back. It was like 265, 270 for Google. I don't mind taking this trade. If I'm right, I get 238. If I'm wrong, I get 262. I'll take this trade. It's pretty cheap. 430 by 435. Can we get above 435? Sure. I mean, is Microsoft doing, is it this where it's just a lot of chop? Maybe that's our pattern here. Or this is a pullback and this has just been accumulation. We're just going to make higher highs and higher lows, and we get back towards these highs by the end of the year. So I'm going to take a stab at it. Now I know this is through earnings, so here's how I'm going to take the trade. If I take a trade right now with this bull call spread and we dip on Microsoft, well, I do one contract here and I'll probably get two contracts here, right? So if I walk away with, let's say 235 in profit, or I'm sorry, 265 in risk. If I'm wrong, I lose 265, but then I get back in at the same mechanics, take two contracts. So I make $520. I lose 265. I still walk away with profit. So if we have a down move, I'll just probably take another trade. Okay, I'm going to take that trade right here.
Hey, Chris.
Right. Frank, what's up, dude?
How's it going?
Good, man. How are you?
Pretty good. Not a busy day today for me in the market, at least, because the market just took off as soon as we opened. But I don't know. What are you looking at today?
So hang on a second. I'm just going to update here. So minus $1.50 plus 50. Still positive for the week. And 7 of 8 winners. All right, I'll get that out of the way. So I'm looking at taking a trader here in Microsoft. I'm going to take a bull call spread on Microsoft here, Frank. 430 debit. So I'm going to do a 430 long call and sell the 435. It's going to cost me 260. But basically, I'm looking at this. Nvidia's at all-time highs. Apple's near all-time highs. Netflix is all-time highs. Meta's near all-time highs. Microsoft and Google. Yeah, like Microsoft and Google could play a little catch up and just kind of flow their way up towards those highs again. So I'm going to take a stab at it going out to December and see if I can get this thing to pay me, $240 a contract. So I'm going to try to get in for 260. So let's see what this looks like. 260. I mean, 265 is fine. 260 would be better. I have a feeling 260 is not going to fill, but I will try. So 260.
Why is the spread only 5 points?
What do you mean? Why is it only 5 points? The strikes are 5 points apart.
Yeah. If you're thinking of a catch-up trade, wouldn't you be going like closer to the highs? Or is this a shorter term?
This is just a bull call spread that I can set it and forget it. There's no assignment risk. If price goes up and closes above 435, I just keep it. Yeah.
Okay.
Yep. So let me edit this too. Let me see if I can get filled for 262 as the mid. Nope. 263. Nope. 264. 265. Filled. All right. Let me get this in. So this is 265. Hopefully this fills for all accounts here. It's getting filled at 264. That's good. Couple more here.
What about a bull put spread?
I would do a bull put spread if price is lower. I would do a bull put spread if I wanted to take ownership, which I don't. I mean, I'm not going to take shares at $400, I mean, a credit spread's fine. But yeah, let me finish up these orders and we'll talk about it. I mean, so I am doing some credit spreads on Tesla. I'd actually, if I was to pick, I mean, the premiums are pretty decent. Let's take a look at the premiums for like a 30-day covered call versus Tesla versus Microsoft. I would imagine that Tesla's offering way more premium as far as owning shares. So let me see something here. All right, there. Trades are in. Frank, let's you have anything to show? I'm going to get this into my Pulver alert section here.
Is this
and then I want to talk about this.
Is this for December? Is that what it said?
Yep, December 20th.
I guess what I'm wondering for your trade is so that's 2 months away, and you're only doing 5-point spreads, meaning will it even be full profit if it's a month from now and price is 10 points higher? Like, could you
It won't be
realize?
full profit. No, it'll be full profit by December, but it could be like 90+% of the profit like next month. If price is going higher, I could see that 265 debit trading for, 475, 480, 490 credit. I can get most of the profit within probably 30 days. I don't have to wait until December.
How much did you pay for it again?
265.
Okay. Okay, I see what you mean. But I don't know. I feel like if you're going out to December, you could go like 430 to 450 or 460 or something like that.
And then pay what?
Well, it'd probably be like, I guess 12 to whatever, 12 to
Yeah.
15.
So that's what I don't want to do it. I'm going to pay $200 to make, I'm going to pay 265 to make 235 with a higher probability, in my opinion. If Microsoft floats up towards those highs, my goal would be, if I want to close it out, either I do nothing to just let it expire worthless and get my full profit, or two, if I'm up 90+% of the profit for capital efficiency, I'll just close it and take the trade at 480 debit, 475 or 475 credit, 480 credit, and just take majority of the profit. So
Okay.
I'm not taking the trade with the intention of waiting until December. I'm taking the trade because all I need price to do is get above 435 in the next, let's say, 30 days. If it does that, we'll assess the profit.
Are you
But
just doing one contract?
I'm just going to do one because if we have earnings next week and it goes lower, then I'm probably going to look at a gap fill on earnings with 2 contracts, and then I'll start talking about credit spreads, because if it dips lower, then we've got an improved IV. I can go further out of the money. I can do ratio spreads. I can do all sorts of creative stuff with the IVs up.
Okay.
So yeah, I can get
So
way
this
more
could
creative
be-
with earnings next week.
Gotcha. This could be like one of a couple legs that you add onto the
Exactly.
trade.
Yep.
What happens if it just goes straight up? And like,
Fine. I'll just take I'll just take profit on this bull call spread. If it's looking really profitable, like it's going straight up, then I'll probably add more bull call spreads or credit spreads along the way and just kind of generate the income if we're going to those highs.
okay, I see.
End of your rally. Yeah.
I took profit on ASML today,
Okay.
but I wasn't really happy with it because it was $1.30 for November something. I think it was late November. And price went from $1.30 to $1, so I took the 30 cents credit, but that was over a span of like 5 days. And I'm doing these bull call spreads for like $1 to $2 or something every day. So it was making $30 and a week of trading was not really something I like doing, but I mean, I don't know. What are your thoughts on taking longer term positions? It's only like a month out, but still, it was just very slow moving. Profit didn't really change that much the whole time, and then today it finally dropped 30 cents. So I was like, I don't know.
Okay. So what did you do on your trade? You did bull call or bull put spread?
Yeah, I did a bull put spread on ASML at
Okay.
680. So I sold the 680 and bought the 675 put.
Oh yeah. Okay. And how
And
far out? You said you went a month out for that expiration?
it was about 21 days, so 3 weeks.
Okay. So what was your initial fill?
Um,
685 by 680? 685 by
680 by
680?
675.
680 by 675. Okay. What was your credit on the trade?
It was $1.30.
$1.30. All right. And it's what, trading for $1 right now?
It was this morning, and then I closed it.
Oh, okay. Okay. Yeah, I don't know, man. That it's a good trade. I think that I think you have some really sticky implied volatility in these semiconductors, because I would have thought that, getting into 680 and being up $40 a share would have given you a lot more decay in that position. Like $1.30 should have been traded for like 65 cents or 50 cents, because you have time left in it. But I would think based on the price alone that you're able to get a lot more premium out of that. So I don't think that's a bad trade, dude. There's something clearly sticky where, I mean, you're up $40 in the stock price and we're only getting 30 cents of premium decay. So I don't mind it, to be honest. Otherwise, you stick it out and you just, take the same type of trade. Now, when you took the 680, were you out of the money? Was it already trading around 720 when you took the trade, or did you get it like at the bottom when this thing first hit like 675? When did you get in the trade?
Okay, so that's a good point there. So it was probably, I don't want to get it wrong, but I think it was Friday. It might have been last Friday. I can check
Okay.
on what I put on Discord. But it had already risen. So let's
Okay.
see. This was the 18th, which is last Friday.
Okay.
So yeah, that's why it really didn't move. I guess because I had gotten it at the highest point it's been in a week or so.
I gotcha. So probably what happened is the initial reaction here was high IV, and by the time you were getting in, that was already decreasing. And so rather than getting all the quick IV that when it gonna get sucked out of there, that would have been how your trade could have paid a lot faster. So you may have gotten in just a little bit later, where there's not enough to get it smaller. It's going to take longer to get that out. So that was the opportunity where it's like as soon as that thing dropped, if you were taking that trade, that ideally would have been how you got the most bang for your buck. But I think you did the right thing, dude. I mean, it's price is up $40 and you're getting nothing on that premium decay. So I think you made the right call just by taking the profit. Just my thoughts.
Yeah, I was just hoping like after that big recovery it would continue to climb, and I think that's when the decay would have happened.
Right.
But it didn't really change much. I'm happy to be out of it because I wanted to free up more buying power. And it's $30, I'll take it.
For sure. Yeah.
But
No, it's a good trade, man.
it's whatever. Today though, I'm looking at the S&P, and the first minute was like a 20-point move up, something like that. So I'm not really.
I got hit on. I took a loss this morning on my SPX trade, and then I got back in and pulled a little profit. So on the day, it's I'm still red on the day, but I'm still positive on the week, which is good. I'm actually tempted. I've got one priced out right here to take another trade, but I don't need to be greedy. I'm happy. I'm 7 for 8 for the week with winners. I'm net positive. I've got some good cash coming in. Earnings on IBM win. Earnings on UPS win. It's like I don't need to be greedy, especially if this gets. I don't know if we're getting more directional. I said this morning we have a gap right here, and price came after it. We have a gap right here. It wouldn't surprise me if price comes after both today. This one's now officially filled. Does this one get filled later today? Maybe. The direction itself doesn't really do much, but I could see price being like somewhat choppy today. What do you think? You think we're going to all-time highs before Mag 7?
No. I don't really know why we came up so fast this morning. Yesterday was a good day, and we ended up red on the S&P.
That's true. Let me do something right here, dude. I'm going to look at a broken wing right now. Let me see if I can do a broken wing. So on the call side, if I do let me do a call fly.
Are you going to go down to 820?
I'm going to go up. I'm not going to go in the money. I'm going to go up. So if I did a strike where basically I would say this, are we going to break the all-time highs? That would be 58.78. 58.78. So I'll go 58.80. See if I can do a skip strike. That's not right. That's not right. Are you kidding me, dude? So I can't even get a credit on this trade? What?
Is that December again?
No, this is today. I was trying to get like a 0 DT broken wing butterfly I was hoping I'd get like 50 cents. So if I take the trade at the money, there's my skip strike for $1.05. I mean, yeah, I thought I'd get like maybe 50 cents on it, but it's not even offering me So a broken wing butterfly or skip strike, it's giving me literally a 5 cent credit. So
what is that, 875?
If I pinned it at 58.80, but if I pin it 58.75, I mean 5 cents credit, dude. Like it's just I'm not going to take the trade. That's stupid. So never mind. Now that being said, NDX less liquid, but let me take a look at NDX for a second because perhaps this one. Oh my gosh, dude! Look at this thing out of Nasdaq. We actually hit new weekly highs this week. Interesting. Well, this one might pay a little bit more. Let's see what 26 looks like. 2,600 on NDX. Now, last time I took a trade with you on NDX, I got burned big time. So let me see.
What was that trade?
That was during that CPI news when we freaking fell, and I was like, oh, we'll come back up to the highs maybe, and I just got blown through that CPI day. I took a full loss on that. Yeah, that was not a good choice. Okay, so I can maybe this one's still way out of the money. It may not pay as well. Let me go down here to the 6s. So I'm going to go 2,600 for my pin price. And so that's not bad, Frank. I could do, so there's risk on the trade. I'm risking $900. There's a profit trap if we get to the highs. So if this thing gets higher, let me see what the percentage is already. So from the close yesterday to the move today, it's up 1.58%. We would have to go on the Nasdaq today. I guess the downside is if there's a 1.82% move, I am taking on risk, and I'm going to be traveling here in probably the next 2 hours. So this isn't a trade that I get to monitor, which I would say I'd be pissed if I lose this whole amount. So
yeah,
probably not a trade I want to take, but it is offering $1. That's what I'm saying. It's tempting. If I'm willing to take the $900 risk, I can go after a safe $100 profit, and then I've got a profit trap of $1,000 today. So the nice thing is on the mechanical side, it's an 18 delta, which is about an 82% chance of profit. If we've already kind of hit the top of the day, but like I said, if I don't have the day to monitor this, I probably will just leave it alone. But as a fun experiment today, let me hypothetically trade. Let me hypothetically take it. So I'm gonna put this trade on my chart as if I were to take it for $1 credit, and that would be like $100, $125. But I'm just gonna see, and I'll smile ear to ear if I don't take the trade and it blows through 2,600 because that saved me $900. So anyway, so 20
is that at the highs?
That's at the highs, yeah. So we have the recent highs today, and we have the highs of the week. I went up another 20. Let's say another 150 points. So we'd have to go 1.82% on the Nasdaq in order for this to be threatened. And there's also a profit trap. So that's why I wouldn't mind the trade, because it would be price can pay me, price can give me a profit trap, and then I have my risk. If we blow through this top right here, then it's my risk. But I still have this trade where I get paid here, I get a profit trap here, and then I have my risk here. So it's not a bad trade, but if we go, up on the day and then up on the day again, like that trade gets threatened. See what I'm saying?
Yeah.
So I'm like you said, I'm gonna hypothetically do it. So 2,600.
That profit trap you have is, what is it, like 5 or 10 points apart?
Yeah, it's I think it's 10 and it's 20. So that should be a 590 by 610. So 20, 610 or 620. It should be a skip strike. Buy call.
Sometimes
let me see. Sometimes the NDX is wide though. Yeah, it's 10 wide and 20 wide. That's correct. So if I could get filled for $1 here, like yeah, I'm not going to take the trade, but just for fun, that's going to be a reference point of like, yeah, that could have been like $100 today. But I'm not going to take it just in case I walk away and it's going to be a full loss of $900. And then I'm giving back like half the gains I'm making on AT&T. So I'm not going to be greedy today, Frank. I'm going to take my profit at AT&T, get about $7,000 worth of buying power back, take my $1,700 profit, take my win for the week, and not be greedy. So just for fun.
Yeah.
It's there, but I don't need to risk it.
I took a loss yesterday on the bull put spread strategy.
Okay.
But today I really wanted to get in and test another one, but
yeah,
I can't get in at like below the open now because of how far it ran. So unless it comes back there, I may look.
Yeah.
But
where did it go yesterday? So you end up losing yesterday? How'd that happen yesterday?
I took it basically at open. I had it at
okay, there.
I think my threshold was 810, and look where it missed.
Oh, dude, it was so close. Yeah, it was so close.
Closed at 809 something.
Well, did you let it expire and get cash settled? Because that could have been a partial loss, right?
No, because the threshold was 810. So anything below that is a complete loss.
Oh, wait. So what was your you did a bull put spread, right?
Yeah.
So did you do like a 58.20 by 58.10 or 58.15 by 58.10?
Actually, it was a 58.10 by 58.15.
So you sold the 58.15, bought the 58.10. Okay, so that closed like $1 or 1 point out of the money entirely. So that's a full loss.
It was like 20 cents below.
I gotcha. Yeah.
Or
Well,
it's
even
more
so,
like
you would
3
have
or
taken
4
you
cents
you
below.
still had the whole spread. It was below the whole spread, so that was a
It
loss. I was
was,
wondering
so
if it was inside of it, that'd be a partial loss.
yeah.
Okay.
I mean, if you look at every day, it's likely to close flat or higher, but the fact that it got so close was such a bummer because it ended up being a complete loss. But today, I can't chase price. I have to stick to doing that strategy. But I've been recording it. I think I have like 12 trades now. There's maybe more. I'll have to check. But
12 winners, or you've taken 12 trades and had like 9, 10, 11 winners?
I could be wrong. Oh no, I'm at 18 trades.
Okay.
So this is a mix of bear and bull call and put spreads. So from September to now, tracking it, it's 1,200 total profit, but I'm hoping to see it climb and not go back to zero. So
Yeah,
at
for
least
sure.
there's a strategy there.
Uh-huh.
But it's only been about a month. It's gonna need more time.
Right. Oh man, dude, I keep staring at that 2,600. It's tempting, but I'm not going to take it, Frank. I'm going to exercise willpower. I should probably move on to something else then before I press the button, huh? All right, P&L on the day is good. Get this out of here. Don't push the button, you dummy. Let me see so China had a pretty good comeback today. That's one thing I did notice. So we have HSI at 0.49, BABA's up 2.25, Baidu up 1.07, FXI, JD's up 3.34%. This is looking way better on little JD. I've got this thing hopefully going to get called away. Let's go to JD.com. At 40.63, I've rolled my calls down to $42 for next Friday. If it gets called away for 81 cents, that would be, break even's 40.82. So I get it called away for $1.18 per contract. That'd be 1.18 times. So I make $5.90 on that one. I'm still in OXY. I rolled OXY down, and I'm going to, I think I rolled it this week. Let me double check that. So let's go here, OXY. Where you at? Bueller? What the heck? There it is. So I have my shares. I have it covered at 53, and that's out to the 8th. So if it gets called away, it gets called away. If oil, maintains that floor, that's good. I'll still repair it. I still have the put out to November. I might end up adding this as a minimum expense. One thing I'm also considering is let's check something. I don't know. This could be like a stupid waste of money, but I want to look at like the SPY, and maybe it's dirt cheap. I mean, the futures market is a whole different animal. But if I did the SPY, like, let me see if I just go like 30 days out and just buy something dirt freaking cheap on the SPY. I'm looking this. If we have like a crazy drop in the market where for some reason, like, the election volatility or Mag 7 next week, like the market drops 5%, 10%. I have a strategy that I'm just like considering sacrificing a little bit of the consistent income to just pay for like a black swan event. And I don't know if we're going to get one. But it could be just a waste of everything. But if it needs it, I have it. So I want to take a look at something on the SPY and the Qs right now. So SPY would be if I went out, let's say 35 days to the end of November, and I buy just a freaking dirt cheap
put.
I'm just going to buy like a 10-cent put. And I know that's nothing. But if the market were to drop 5 or 10%, and I mean, so here's the deal. I could risk $100. Okay. I could buy 10 contracts. And if this, let's just talk like gamma for a second. Let's talk like delta. This is a 0 delta. Okay. But if I buy this for 10 cents and I buy 10 contracts and it cost me $100. Okay. For $100 hedge, if we have a 5 or 10% move in the market, that is a 50 to 100 point move right here. Right? No. That's what it's like a 5. What the hell? If we have a 583 times 0.05, we'd have a $30 move or a $60 move. And if that is enough to move the needle where this 0 delta becomes like a 10 delta, 15 delta, 20 delta, I just wonder if this 10 cents becomes 20, 30, 40, 50 cents.
How far out?
I'd go out 30 days. So I'm looking at a 35-day expiration. If I bought this hedge, I'm just curious. I mean, I can turn $100 risk into maybe a $500 to $1,000 reward. It's not like it's not a monster hedge, but it's there where if the market does something crazy, that I could just turn a little bit of risk into a lot of money. That's all. And if I wasted, I mean, this is more expensive. This is less expensive than me putting in like a 0.25% risk or a 0.5% risk, like I've done pretty much all year since July. Like July was the profits paid. I hedged, profits paid really nicely. August, I just wasted money on hedges because we had no follow through from that August 5th bottom. September effect, it paid early with that Labor Day sell off. I grabbed a few bucks on MES, but until then, I really haven't gotten anything out of it, you know?
I mean, if it goes down by like a couple percent,
that
your
won't
10
matter.
cents could be worth like 15.
Right. But if it went down like 5 or 10%, then it pays probably 20, 30, 40 cents.
True.
So I mean, I could, like I said, I take $100 risk. I turned it into $400 or $500 of profit. Like I said, if I wanted to get nuts here, then I allocate the same like 0.25% and I take on like 20 contracts and I turn a $200 risk into maybe a $1,000 reward. It's like, that's okay. It still doesn't hedge my entire portfolio. It's just, I don't know.
It's a very small hedge because aren't you going to be leaning bullish in this next month anyways? I feel like seasonality wise, we have.
But that's what everybody. I mean, part of me is just getting a little more like everybody thinks this market's going to go up, and everybody thinks this market's going to blow up. And I get it. I mean, look, I watched Druckenmiller's report on Bloomberg. I watched the interview with Paul Tudor Jones. It's like all these big guys that have skin in the game are talking about. Look, this is going to be an inflationary problem again. Everything's going to go up. House prices go up. You know, stock market goes up. Commodities go up. And ultimately, that might be the break. That the inflation story is going to come back. We're going to have a second wave of inflation going in through 2025. But right now, it's like Trump, Harris. Even if it's a Republican sweep, I don't know if that's going to change the market's mindset. I don't think that it will necessarily. It's probably more of like a social policy that changes versus our financial policies. So it's probably better for business to have Trump, I think. But then we have tariffs and we have other inflationary pressures, but the government's going to spend money regardless. So I don't know. I'm just throwing it out there.
I don't think we can hit 300 or low 300s by.
We absolutely will not, but it doesn't have to hit. That's my point. Is if this happens, so those type of hedges would be this. If we had a week like this again, okay, if we had a week like that and it happened within 3 or 4 days, then a 10-cent hedge could easily be paying 50 cents to $1.
Yeah.
Right. Like that's what can happen. So that's why it's out there, just, way the heck out there. It's dirt cheap, but I could turn a very little manageable risk into a lot of potential profit. And it's really not about that trade being a winner. It's more like, could I hedge my portfolio to, instead of the market dropping, it's like, yeah, it drops, but I also offset, thousands of dollars worth of drawdowns because I can take that in a nice hedge. So it's all the same. Like there's no free lunch when it comes to a hedge. You got to pay for it somewhere. You're going to see a drawdown in your portfolio in order for your hedge to pay out and kind of mitigate some of the risk. Or you overhedge and then you never make money. So anyway, point is, this has been something I've been thinking about because I didn't mind this week seeing that little pullback on, what was the pullback day? Tuesday, Wednesday? What was our day? Friday, Thursday. So Wednesday was that directional day to the downside. I didn't mind seeing that little bit of a pullback, but as we're going into the election 2 weeks away with Mag 7 next week, I mean, I would almost not like to see the markets at all-time highs as we go into the election. I really don't want to see that. Now, it doesn't matter. It's like, okay, well, Chris is an idiot because if that's what happens and the market just goes higher, well, why are you calling the top? I'm not calling the top. I'm just wanting to see, can price just pull back to something reasonable? Give me a 21, give me a 50, give me some dynamic pullback that I can follow through with. And then I'll be happy to position on, the $750,000 that I've got in cash right now that I'm trying to make, put in the market. So
Yeah.
that's all I'm saying. So I just wonder if like next week Mag 7 has the power to drive this market higher or drive this market lower, because there's so much market cap in Mag 7 that it really is a good representation for the broader market. If we look at the StockTwits calendar next week, it's a pretty big week, dude. I think we have like over 500 companies reporting earnings, do we not? So let me add this up really quickly. And this is including Mag 7, most of them. So 172, 302, 219, and 38. We have, it's like 700 stocks, I think.
Yeah. So there's a ton.
Yep, we got
Mag
797
7.
next week. 797 in earnings. That's a lot. And you got the Mag 7 sprinkled in there.
That's something that we can talk about next week, because
yeah, we got to go.
Nick Phillips is coming on.
All right. Okay, yeah, we'll talk about next week. Meanwhile,
right.
I'll take my hypothetical trade on NDX in my head.
Let me know how that goes.
Yeah, no, overall good week, man. UPS, IBM, Tesla, SPX 7 for 8 this week, net profitable there. AT&T getting called away, did some rolls, did some maintenance, like portfolio's in good shape, sitting up here near these highs. So far so good, man. No complaints. All right, dude.
Yep.
You have a good weekend.
Yeah. You too. Safe travels today.
All right. Thanks, Frank. See you, everybody. Bye.
See you.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat, as well as in the description of this live stream. Check out Vantage. Now back to the show.
Good morning. Good morning. Welcome to the 11 o'clock segment of the A1 Trading Show. My name is Nick Phillips, and I am going to quickly jump into some things for you guys. As always, during my segment, if you guys have any questions for me, any Forex pairs, I'm mainly a Forex trader on the futures side of things. Feel free to drop any questions or any pairs that you want me to analyze in the chat, and I will try to circle back at the end of the segment and review anything that you guys would like me to. All right. So at the beginning of this week, I went through some news headlines here on the PIQ suite, and I realized it was a bit messy the way that I went about it. So I have put together this little headline wrap here for you guys of some of the most interesting headlines that I saw from this week. Goldman Sachs says that hedge funds have dumped China and are buying U.S. stocks ahead of the election. Iranian officials, I think I said that right, have been warning of potential striking of the Beirut Straits. They will do nothing if Israel keeps the attacks limited. So a bit of geopolitical headlines there. Hedge funds bought tech stocks at the fastest pace in 5 months, according to Reuters. Jamie Dimon, I think I'm saying his name properly, would consider a role in the Harris administration. BlackRock CEO says U.S. election, quote unquote, doesn't matter for elections or for the markets. Nasdaq had its worst day in 6 weeks on Wednesday. Let's go take a look at what that looked like. I believe it was this was our Wednesday in Nasdaq, and the market has already since recovered that day. So markets seem to have shrugged that off. Dow had its worst day again on Wednesday that it's had in over a month. Gold suffered its worst drop in 11 weeks, all happening on Wednesday. Bank of Canada cut rates by 50 basis points to 3.75%. That was as expected. Bankers see tepid investments amid elections geopolitical uncertainty. This headline basically backs my entire psychological approach to the markets right now. Is I'm really incredibly hands off with anything other than my red folder scalps. currently due to the elections and the backdrop of the geopolitical tensions. Europe's economy is poised to fall farther behind US, according to Financial Times. UK will change fiscal rules to help fund $26 billion worth of annual investment, according to Financial Times. I was listening to the PIQ Suite Morning Blast this morning, and really interesting episode out of those guys over there. This is apparently sort of seeming to be like a UK ticket to unlimited government spending. So very interesting to peel back the hood on this headline. And Trump is leading by, I believe it's 21% now on Kalashi, the voting betting platform, ahead of Kamala Harris. Robert F. Kennedy getting less than 1% of the entire betting margins there. So that is the A1 headline wrap for this week. Now, moving on, let me review some of the things that we did this week in Victory Capital. We traded, let's go here to our events calendar. This week, we traded the BOC meeting. There was nothing there, no discernible edge. The CAD did fall on the interest rate cut. I didn't want to take anything on it because that was as expected. Which day was this? Wednesday. So as expected news, I tend to not trade anything when we get exactly what is expected, but the market did sort of fall off for the first couple hours of the session after we got the interest rate decision, and then quickly climbed back up throughout the rest of the day, and then fell off again on Thursday. And it's kind of since remained deflated a bit, but relatively speaking, for a 50 basis point cut, if it wasn't expected, we would expect to see a lot more downside out of CAD. However, we did not get that. So no trade for us on Wednesday. And then Thursday morning, bright and early, 3:15 my time, we had the French PMIs. Got a quick trade out of that. I'll show you guys the numbers real fast. They weren't fantastic as far as a surprise goes, but they were enough for us to get a quick little scalp. So the manufacturing flash PMIs came in relatively as expected. Same thing as the services flash PMIs, relatively as expected. And then composite flash PMIs gave a big downside surprise. So we grabbed quick scalps here on the euro side of things. I'm looking at euro on the futures market. This is the exact same thing as euro USD when it comes to price action. Different contracts, same price action. And we grabbed sells on this little bit of a pullback. Yes, I'm on the 5-second chart, and we got out really quickly. The reason I got out so quickly on this is because 15 minutes after this data drops, we have the German PMIs. Now, the German PMIs made trading the euro a little bit interesting for me when they dropped, and I'll explain why. We had, as you can see, this is a better picture of the overall data release. So on the manufacturing for the French numbers, manufacturing services and composite, you can see that we came out lower than the forecast on all three, but we did not come out lower than the low from the bank ranges that are submitted to Reuters. So no surprises here as we fell in between the high and low range. Surprise here, took quick scalps off of this surprise. Then the German data dropped and we had all upside surprise. Now, because these are two of the biggest economies in the Eurozone, we're trading the euro with these. When we have one piece of data that points to the downside for the euro and another piece of data, even though it dropped 15 minutes later, pointing to the upside, it muddies the water a little bit, makes it a little unclear as to where the euro economy is headed. I will say, looking at these numbers a few days later, something that I do notice is these PMIs, all except services, are under 50. So they're in contractionary territory. Services is in expansionary territory, and manufacturing and services both surprised the market to the upside. So I did take quick upside scalps 15 minutes later. Again, got out relatively quickly. The market ended up climbing up a bit more throughout the rest of London session. I'm not quite sure where it went from there because I walked away. So that is the Euro PMIs. And then again on Thursday morning, we traded GBP flash PMIs at around 4:30. We go live about 15 minutes ahead of the event. And we got quick scalps out of the pound for those. Sorry, I know I'm probably causing a bit of seizures here by switching back and forth so quickly. So pound PMIs, we had downside surprises. Now granted, one downside surprise, slight surprises under the median forecast, but one under the lows. But you'll notice here, all of these are above 50. So they're all still in expansionary territory, even though they came out less than expected. So keeping that in mind, these reactions out of the pound make perfect sense from this data. We saw this big drop. I didn't get in. I was a little slow on the trigger. Saw price coming back into this little wick area here. Got some rejection. Tried to push up. Got this big rejection candle here. Hopped in and got out just underneath these wicks. And then that was a pretty good exit because the rest of the morning, I should say, saw the pound climb. So the rest of London session and going into New York session open, we saw the pound climb. And I believe that this is a natural reaction based on the fact that even though we had less than expected figures, the PMIs still showed that the UK economy is in expansionary territory. So that is it for us for what we traded this week. We did trade US PMIs, but they all came out exactly as expected. So there was no opportunities there for us. And I did not trade at all today. All right, let's take a look here at some charts. We'll get out of the 5-second hyper scalping mode for how I tend to trade, and we'll take a look at the Doxy on a daily standpoint. Still climbing, still got a lot of upwards momentum here. Again, my bias has sort of shifted on the dollar. I think it's going to be interesting once we get past the election. Of course, that's kind of my biggest hindrance to even wanting to make any sort of projections here. Is I want to get the election behind us, and then beyond that, we have the holiday season, which I think is going to kind of stall things out a bit. But Doxy getting upwards pressure. The Japanese yen, interestingly enough, with the elections happening on Sunday in Japan, there is a chance that the LDP is going to lose power, which, according to some analysts, is basically the best case scenario for selling all things Japan. Does that mean the yen? I don't know. Especially seeing as how the market is theoretically, supposedly supposed to be pricing in rate hikes over the next few years for the yen. If you zoom out here, we're still in relatively bearish territory. Not relatively, we are incredibly bearish on the yen. So with that in mind, I see some potential for upside in the yen from these areas due to their monetary policy outlook, their projections over the next 2 to 3 years. Okay, so we have some haters in the comments here. It's all good. Not trying to talk fancy, just trying to share some information that I have come across. So, yeah, when we're looking at this on a technical basis, we are starting to form this inverted head and shoulders here. Got a shoulder here, right shoulder starting to form. We got this head that is already formed, and this head and shoulders pattern is forming at a previous area of major support from a couple years ago on the yen. So aside from the election coming on Sunday out of Japan, I think on a technical basis, this is a solid area to start looking for some buys. Now, if we begin to fail below this level, price trade significantly below this level, not that my bias shifts entirely, because I am still kind of bullish on the yen long term. I think we're in for at least a few weeks of uh, continued yen downside. Try to delete these drawings here. All right. Moving on. Let's look at gold. Look at spot prices. Gold, of course, doing gold things. Big downside on Wednesday. And I think some of this is still driven by some of the geopolitical tensions that we have, the Iran issues, the Ukraine pervasive issues. I think potentially some relief could be coming as some of that stuff sort of dwindles in the background. It would be nice if, I say nice, you hope and you would love to get involved in some pricing that is lower than where we're currently at. But I remember just thinking about it last month. We were on the show making projections about 2,600, and now we're approaching 2,800 on gold. So would it be nice to get a pullback into 2650 range to start trying to buy this back up into 28? Absolutely. If it breaks down below this level here, I could see 25 being another buying target. So if we get lucky and gold decides to fall, maybe does a head and shoulders and continues to fall down here, 2,500 would be a great place to start buying, in my opinion. I do think there's a little bit of risk when it comes to breaking down past this level, depending on how much volatility comes into the market on these gold sells. There's some risk that we fall into this territory here, which is 24, 23 range. In which case you need to, obviously have proper risk management going into this trade and know that there is a big potential for price to move into this zone here. Personally, I won't be trading it this way. I won't be taking any swings on this, but it is a outlook that I have for the gold market in a best case scenario for getting continued buy opportunities. Again, it's one of those things where it's like, I don't want to buy as we're at all-time highs. We're just continuing to climb. I think I continue to say I don't want to buy, and the market just continues to go up. But personally, I just don't like buying into a already elevated, incredibly elevated market. This, you don't want to say bubble when it comes to something like gold, but it feels a bit like a bubble. Everything actually seems a bit like a bubble right now. We have just been on a tear, massive tear on stocks, massive tear on gold, tech stocks. Tech stocks suffered a little bit over the summer, but for the most part, just a massive tear over the last 2 years. All right, let's see here. It's 11:20. I'll move on to some questions now. If you guys have any pairs that you would like me to analyze, I'll be more than happy to do it. I believe that's Merrill has asked me to analyze Euro Odd. So I'm going to go check that out for you. actually delete all these drawings here. So, what I don't like about Euro AUD, just looking at it already on the weekly, is we've been stuck in this range for a year and a half. Not great as far as trying to get a directional position here. Daily is starting to break out of this little price range, order block, whatever you want to call it. Trying to break at least. It's tried a couple times. 1 tap, 2 taps, 3 taps. Working on its 4th tap to try to break this 1.631 area. If you guys are wanting me to analyze based on set and forget metrics, please let me know. I know I have some guys from the set and forget community that show up from time to time and want me to do set and forget analysis. So please make sure that you clear on that when you ask me. Let's see. Last major low on Euro AUD, last major high. So theoretically, weekly is still in bullish territory. Daily. Still in bearish territory. Let's check the 4 hour. 4 hour is relatively bullish. So if this is a set and forget opportunity, I would say you have 0 time frames in sync and no trade here. However, on a non-SAF approach, this is a decent area to start selling from, in my opinion. I'm very bearish on Euro, also a little bearish on AUD currently. So I could see a lot of consolidation out of this pair, like we've been seeing. But this is a decent level to sell from. Let's say the next best level to sell from would be up in here. Maybe a bit of a pipe dream to see Euro climb that high against AUD right now. But a couple things like that, I think potential opportunities there. All right, moving on. I have been asked to analyze GBP NZD. Not a problem. Scale out here to the weekly, get a idea of the direction. Looking relatively bullish here. This leg makes it a bit interesting because you had this kind of stickiness here. Still bullish on pound NZD. Technically, not sure how I feel about the fundamentals of this pair as far as if I agree with the technicals, but let's just say I do. Identify a little area of interest. Problem with that AOI is if we go down to touch it, we will be shifting bearish. It's not a great area of interest, but I could see something like this playing out. one of these two scenarios I could definitely I could get on board with. And then obviously we would zoom in here. I would zoom in here personally, and I would look for a couple things. Obviously, if we pull back into this area, price will be going bearish on the 30-minute. So we'll be making some downside structure. And we want to see some structural shifts here and good price action technical patterns to buy this up. So GBP NZD looks like a buy for me. It's just a matter of waiting for a decent opportunity, which we might not get if it's already moved from this area at this point. It may not tap back down into this zone before climbing to what would be TP range for me, being at these highs. See if I can identify a second TP area. Yeah, no. Those highs is where I would target for TP. Not to say it can't go above that. Obviously, we have historical data predating what looks like Brexit. So really, since Brexit timeframe, we have not traded this high on this pair. Interesting. All right, somebody said US 30. Let's go check that out. I'll do one or two more here for you guys on this Friday afternoon. Where do I have US 30 on my list? Dow. I haven't looked at US 30 in months. Having a pretty bearish week. Let's see how that compares to tech stocks and the regular stock market. Regular stock market's not super bearish, but the Dow is definitely bearish this week. BY majors to go. Not sure what you're saying there, Anton. So we're obviously entering a major area of price action here where we came in towards the end of September and just kind of consolidated until the first week of October, pushed up out of this range, and now price is coming back to test this area as new support. Whether or not it'll hold is anybody's guess. However, something I could see happening would be a brief touch into, let's call it equilibrium of this order block. So if you wanted to start buying up the Dow, I could see it moving from where it's at now, bullish. Obviously not today. You know, in my opinion, it's Friday. Even again, moving into the next couple weeks, price action is gonna be, I think, a little bit more difficult to anticipate than it typically would, because we have the U.S. presidential election coming up 11 days from now. So I can see it doing this, establishing support at this previous resistance and previous support. Tapping into the equilibrium area here, about 50% of this entire order block, and bouncing from there. And a bounce from here. Generally right now, I'm relatively bullish on the stock market as a whole. Just in general, it's, there's no real reasons to to kind of bet against it. The only thing I would say that is looming, a looming risk for the entire stock market, would be obviously the tensions of all the geopolitical things happening right now. So keep that in mind, and know that those are big downside risk, in my opinion. And the election is relatively another downside risk for the stock market. But if I was looking to buy US 30 out of anywhere over the next, let's call it 4 to 5 sessions, I'd be looking out of this zone. For those of you that are, scalping first thing in the morning, looking for trading opportunities, that exist ahead of London close, I think there's more than enough room for these things to create smaller opportunities out of these areas. It's just about getting the right price action patterns. So, all right, that's the outlook on Dow. Major pairs of volume. Okay. All right, I'll touch on this last one. What's my take on UJ potential sell at level 155, 645? First, it really depends on what kind of trade you're trying to take. Are you trying to take a swing trade? Are you trying to identify 155? 155, 645. Call it right here. Is there a reason why this specific price level, maybe the top of some of these wicks here, the bottom of these, I can see some of the support area. It feels a little arbitrary. If anything, I would say the most obvious sell for me is where we're at from these levels. The risk that you have on this specific pair and trying to sell it from where it's at right now is the election on Sunday. So market open on Monday, could be some funky price action depending on the results of the election. So I would let Monday go on UJ personally. And then as we move into Tuesday, Wednesday, Thursday of next week, if you're looking to swing trade this, then I would start looking for opportunities on UJ. Now, that being said, you may, if you take that, if you run with that kind of idea, then you may potentially miss out on the election catalyst. However, I think it's going to be a tough call the day after the election happens. I think it's going to, yeah, that's a tough call to try to either buy or sell UJ the day after Japan elections, the week before US elections. Personally, I would leave this pair alone until after both of those elections so that you can, have some clarity. But that comes with the added risk of missing out on the catalyst. So for me, first selling opportunity is going to be here. If it breaks up above this, I don't know if I would aim to sell it at 155, 640, maybe more so like 158 when we have these levels of resistance here. But I'm also not a big fan of selling this pair yet because of the upside bullish potential of the dollar and the current downside potential of the yen. So I'm a little bit more bullish on UJ than I am bearish. And that outlook has changed since the beginning of the year. The beginning of this year, I was looking to sell it from essentially these same areas that we're at right now. But that's when the Fed was talking more about cuts. Japan was talking more about hikes. Japan's inflation has fallen down to 1.8 from 2. So they're having a little bit of, they've reached their inflation target, but with the election coming up, it's a little difficult to know what they're going to be doing with monetary policy moving forward. And while the Bank of Japan and their government are supposed to be separate, it doesn't always seem to work out that way for Japan. So, all right, guys. I am going to go ahead and call it. If you have any more questions for me after this call, feel free to follow up with me on Instagram at official Nick Phillips, or check out my company at Victory Capital, and I will be more than happy to answer any of your questions. Also, one more thing before I call it. Don't know if you guys know, A1 Trading just dropped an announcement about the stock box. For all of you guys that trade stocks, they are following a massive list of stocks. So definitely go give this a check out. If it's anything like the Edge Finder, it's going to be a great tool for people that trade ETFs and other stock kind of approaches. I'm not a big stock trader, so I can't touch too much on this stuff, but it looks really cool. And like I said, if it's anything like the Edge Finder, it is going to be a massive game changer for you guys. So from all of us here at A1 Trading, thank you for tuning in. Have a great rest of your day and a great weekend, and we will see you again next week.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.